Good morning everybody, hope we're doing really good today. Welcome back to the channel. In this video, now that we're coming to the end of the year, I've been putting some thought into next year, into 2021. And I've kind of thought about what's going on in the stock market today and kind of like the YouTube landscape and all the investing channels on YouTube. And kind of came up with my biggest fear of 2021. It doesn't necessarily have to happen in 2021, but it's as good as year as any to get this out of the way. And my biggest fear is a stock market decline or a bear market, but not necessarily a big bad one like we had in March. March was a really steep and hard correction where everything fell, but it only lasted like a month. And if you were, living in a cave or something, you could have easily missed it. It was very easy to kind of get through that correction and then invest at the bottom and make money on the rebound. But the scenario I'm thinking about is not a big correction or a big sharp, crash, but where the stock market just kind of goes down over a long time. Not a big crash, not some depression, but like a slow grind down. That is the worst scenario, I think, for a lot of people, especially a lot of investors that are new to the market, because investing is so much more popular right now than it was even a year ago or 2 years ago. Before I go into the details of what's going on and how I think this is the worst thing that could happen for investors, if you're new to the channel, I'm Justin. I like to talk about dividend investing, income from options, financial independence, document my own journey towards financial independence. So if you get anything out of this video, really appreciate a thumbs up and then subscribe to the channel if you haven't. I'm trying to put out videos a couple times a week. Now let's look at the crash we had earlier this year. So from about February 19th to March 23rd, the stock market, the S&P 500 fell about 34%. And that was, what was the dates? February 19th to March 23rd, so just a little bit over a month. This was all in the news. It was a big deal, and it was the COVID correction, the COVID crash, and after that, we had a really big rebound, especially in the tech sector with things like Apple, Tesla, tech companies, things like that, and it was really easy to make money after this crash. Investing has become much more popular ever since then, within the past year, but especially after that big correction. Like Robinhood has had big user growth. Here's an article by Barron's, talks about how many new users Robinhood has, and this article is from October, and it says that Robinhood has probably around 13 million subscribers, and if it wasn't suffering from all these shortages and weird glitches and stuff, it could have around 15 million, or not subscribers, 15 million accounts, or 15 million, account holders. And comparing that to Charles Schwab, who is the industry leader, has 28 million brokerage accounts. But Robinhood is growing 5 times as fast as these other bigger competitors like Charles Schwab. And Robinhood also has a younger age of, a younger average age of customers at 31, and they also have a smaller account size, accounts less than $5,000 versus the, people like Charles Schwab, whose average accounts are in the 6 figures. But it isn't just Robinhood that's growing, everyone's growing, and ETrade experiences record trading in the second quarter as a retail trading boom continues. And what's this? ETrade reported a record 1 million daily active trades in the second quarter, a 267% increase from daily trades last year. It's added 329,000 new accounts in the first quarter and 327,000 accounts in the second quarter. And what was it? We generated greater retail organic asset growth in the first half of this year alone than in the previous 2 years combined, and generated more account growth than the previous, and created more retail organic growth than the previous 5 years combined. Now with this, ETrade was bought out by, I think it is Charles Schwab. Charles Schwab bought out TD Ameritrade, and then Morgan Stanley bought out ETrade. So there's this big boom, and they're trying to eat up customers. I think it was Robinhood started out with the commission-free trades, and that was the first for the industry. And then everyone else started following suit. Charles Schwab announced that they were gonna do commission-free trades as well. So everybody else had to do it too, and kind of a race to the bottom. After that, after TD Ameritrade announced their commission-free trades, and for TD Ameritrade, commissions were a bigger portion of the revenue. Then Charles Schwab came in and bought up all those customers from TD Ameritrade. Then Morgan Stanley's buying ETrade. So there's a lot of activity right now, and that's in the industrial, or the big institutional side of things. But then also we have more option activity, and this year was records amount of people buying and selling options. Here's another article. Some 583 million calls and puts traded last month, according to TradeStation, a new record for the options market, inching past the contracts for March by 5 million contracts. October's total was also 48% above the same period last year. And you see this too in all the YouTube financial channels of selling options and selling the wheel strategy and stuff like that. Selling the wheel strategy is some of my best videos, my most popular videos. Another indicator is Wall Street bets. Here's a chart of Wall Street bets growth ever since they got started, and you see it's got a nice increase, but right here at around January and February of this year, there's a uptick, and it starts to go even faster. This is the same time as the correction we had this year. Since I've started watching financial channels on YouTube, there were a lot of dividend growth stories, and the day trading wasn't as popular. There was less day trading and option videos. There was more about financial independence, retire early. There was no selling puts and calls was not as popular. SPACs, I've never even heard of a SPAC until a couple months ago. And then the EV trend, and fueled by Tesla's success, now everyone wants to invest in the next Tesla with Helion and NIO. So you see a lot of that kind of stuff too. If we look up EV stock, here we have me, Kevin, talking about a bubble. We have a whole channel dedicated to EV stocks. EV stock, triple revenue increase, best EV stocks, massive NIO news, huge EV stocks, best EV stocks. and let's look up SPACs. Let's look up what is a SPAC. Because when I said that I've never heard of them, what is a SPAC? Created 1 month ago. Here's how SPACs work 4 months ago. How SPACs work 5 months ago. What is a SPAC? 1 month ago. 5 months ago. 2 months ago. 5 months ago. 2 days ago. Actually, what is that? Is that a SPAC? Yeah. SPAC 2 days ago. 4 months ago. 4 months ago. So SPACs are a new thing. Even on YouTube, there's like, you look up what is a SPAC, all the big videos are really new. They're less than a few months old. And I never heard of a SPAC before, like same time, like 3 or 4 months ago. I didn't know what a SPAC was. Now, the thing that could do the most damage to investors right now is a prolonged bear market where the stock market just kind of goes down and down and down. That's what I'm afraid of the most. That would do a lot of damage to all these people that new to investing. If they see, it's easy to get over like a big crash that lasts like a month or two. That's pretty easy. But if the stocks just steadily go down for like a year or 2 years, then people lose faith and they don't want to buy stocks anymore, and they lose interest and they go away. That would be really bad for new investors that have been investing for a little bit of time. And also, if you're investing in these SPACs and EV companies and things like that, those will get hit really hard. Those will go down a bunch, and those aren't gonna come back. Things like NEO and Helion and Workhorse, they may survive as companies. I'm not saying they're bad as companies, but these hype stocks will get hit harder than other things like Apple, even Apple and Facebook and the FANG stocks that have been on big uptrends recently. They can suffer really bad too. So we look at bear markets in the past. Our last correction lasted a month. So here is a little history of bear markets, from the amount of the decline and how long the bear market lasted. So the biggest decline was 86% in the 1930s. This is the 1929 Great Depression stuff. And this lasted 34 months, almost 3 years. Then in 1937, a 60% decline that lasted 61 months. 5 years. How many people are going to invest, watch their money go down and down and down for 5 years? 2007 to 2009 fell 60%, and that was 17 months long. We have 2000 to 2002, the stock market fell 49%. That lasted 31 months. And then what do we got? 1946 to 1949, 37 months. And yeah, those are the big ones. So that's my biggest fear, is a decline. It doesn't even need to be that big of a decline. If it's just negative, maybe even 5 or 10% or something per year, and if it just goes on for 2 or 3 years, a lot of people are going to lose interest. A lot of people are not going to have faith in the stock market. All those SPACs and EV companies are going to get hit harder. All these companies that have a lot of hype behind them will crash a lot harder than, things like McDonald's and Coca-Cola and Johnson & Johnson. And even the wheel strategy, selling puts and calls, those you will still lose money on that, because essentially it's still a bet that the stock is going to go up over time. But those are my thoughts. Who knows if it'll happen? Maybe it will, maybe it won't, but that's the biggest thing I'm afraid of. Not that I'm pulling my money out of the market or anything like that. It's just something that I think would be the worst scenario in the near future. Maybe add a dose of inflation to that. maybe a little bit of hyperinflation, get that inflation cooking up to 10 or 15%. So, hope you get something out of this video. Think about it. Give me a like if you will. Subscribe to the channel if you haven't. Give me a little comment down below what you think about my scenario. And then, yeah, subscribe to the channel. And then I want you to go have a good day, all right? Justin out.